Well, hello, everyone. I want to talk about the year end. The year's ending tomorrow. Tomorrow's the 31st of December, 2020. What a year it's been. We've had the COVID virus. We have the presidential election. It's been a crazy, crazy roller coaster of a year. But it's finally coming to an end, and 2021 is almost here. So I wanted to talk about some assets, some trends, kind of give you a good idea of where I'm seeing this year ending and how I'm seeing next year beginning, give you some traps, give you some pitfalls, give you some opportunities, kind of go over some things that hopefully will make sense. So this is not in any specific order. It's just by way of how my computer windows are open. So I'm going to start with gold. Now, gold, I expected gold to rally more in 2020, and it did not. But usually, trends in precious metals are very long and last a long time. For example, in the last 50 years, we've had only about 4 or 5 major gold trends, but each of them lasts a long time. In other words, they're not prone to false trends in the long-term scheme of things. And while the actual asset made a peak high, a swing high, back around, let's see here, back around the summer, back around August of 2020, and has backed off to our surprise, because I honestly thought that gold would keep its price near all-time highs or near swing highs till this COVID is behind us, but it has cooled off. But some of the mining stocks have not, and if you look on a weekly basis, gold hit the 50-day moving average and is now headed back higher. So here is what I propose we do. I propose we keep an eye on the 1970 level, 1970 price level. This is actually looking at the underlying futures contract. So the gold is right now at 1886. If it can get above 1970, which happens to be my birth year, 1970, I'm 50 years old. Don't ask. But if it can go above 1970, there's a good chance it's going to try to test the high, which is near the 2094 level. So my price level that I would be really curious is that 1970 level, if it can bypass it. If it hits that level and backs away, the odds are we're going to have a bearish gold market in 2021. But if we can take out 1970, there's a good chance we're going to test the swing high of 2020, which is the 2100 level, give or take. So if it can break the 1970 level, there's a couple of hundred points in gold, in my opinion, to the upside, and there's a higher chance that we will go higher. And also, it's too early, in my opinion, to get bearish on gold. The US dollar is in the toilet right now. Cryptocurrencies are expanding their force in terms of payments. PayPal just announced that cryptocurrencies are going to be accepted in 2021. I think this is a huge win for cryptocurrencies, because I actually believe cryptocurrencies are designed and are going to be used in a more fundamental level. I think they have their place in our economy. And I know right now people are looking at them as a swinging mechanism, as a proxy for kind of trading stocks or gambling or speculating. But I honestly think cryptos have a place in our e-commerce market, and I think it's kind of like we're with crypto right now where we were with the internet in the early 90s. I think we're kind of like, cryptocurrencies are like where AOL was in 1993. I think that once cryptos mature, they're going to reinvent themselves and they're going to find their place in our commerce. So I think we're not there yet. I think we're a few years away. But again, with the cryptos rallying higher and cryptos being more socially acceptable in our society, in our e-commerce platforms like PayPal and Square, which is huge, it's only a matter of time, I think, before Amazon starts accepting them. And at that point, they're going to be widely used. And if that's the case, we may be using them in traditional banking and so forth. But again, keep your eye on gold, especially with the US dollar being in the toilet, and especially if we have another COVID panic sell-off, which is very likely because we don't have a vaccine to tie us over in the first quarter of 2021 between now and when the vaccine will be available. And right now, the rate of COVID in the US is going up. So don't rule gold out just yet. Second of all, I believe we are going to see a massive run in the emerging market sector. I don't know if you've seen this or not, but right now, Emerging markets are making swing highs. They are outperforming every market in the world. Ticker symbol for that is EEM or VWO. This one EEM has more liquidity, but either way you go, VWO or EEM, their correlation is uncanny. As you can see here, these assets are at swing highs. And if you look at multi-year, you will see they're making multi-year high. That's a 2-year chart. That's a 3-year chart. You're talking the highest prices in 3 years. So that's a real trend. That's not just a little trend. If we can take out on VWO the 51 level, or on EEM, if we can take out and you should write these levels down or at least review this video. If we can take out and we're very close to 52 level on EEM or VWO, let's go again and see what that level is here. These are long-term 3-year trends. That means there's a good chance it'll continue. It's 51 here. So 51 on VWO and I think 52 on EEM. But they're both emerging markets. Their correlation is like 98%. So yeah, just a little bit, a hair higher, and we have a legitimate 3-year breakout. That's a significant breakout. And again, emerging markets are good right now because money is moving out of the U.S. and into foreign soil. Typically, when a Democrat takes the House, like Biden is going to in the next couple of weeks, less than a month now, you're going to see more expansion and more money flowing out of the U.S. Republicans tend to keep more money in USA, in America, and Democrats tend to spread out globally. And emerging markets tend to run when Democrats take the House. The year that they take House tends to be a big, big year for emerging markets. So I'm looking for big things out of EEM or VWO. Next one, Russell 2000. Russell 2000 are smaller stocks. Smaller stocks tend to do better and tend to do well in a low interest rate environment. And they tend to be pretty good, robust in an inflationary environment as well. While I'm not seeing an inflationary environment right now, low interest rates are here to stay. Low interest rates are really good for consumer spending, consumer discretionary, and smaller stocks have less market capitalization. They're more nimble. It's easier for them to get things together in this type of market environment than a large cap stock like, say, Kraft or Johnson & Johnson. These are one-trick ponies. Now, they were hampered by China and the trade war with China, but since the first election, they have been outperforming the broad market, and they look to be leading the S&P and the Dow Jones right now. Not the NASDAQ, but the S&P and the Dow. And if this continues, I'm expecting the Russell 2000 stocks. They're more innovative. There's a lot of evergreen energy stocks. There's a lot of cloud stocks. There's a lot of disruptive tech stocks in the Russell 2000. So expect the Russell to continue giving us momentum. Now, in terms of the QQQ, which has given us over 40%, I think 43 or 45% this year, that's the NASDAQ 100. You've got to be very, very, very careful. Why? Let me explain to you why. You've heard of FANG stocks like Facebook, Amazon, NVIDIA, Google. That's the stocks that drive the NASDAQ 100. And those stocks have not taken out the high that occurred in September 2nd. That's Facebook. Let me show you Amazon. NVIDIA might have, and Google might have. I don't know. Let me check right now. I'm going to check on NVIDIA in a second. The point is, these stocks are not doing that great, as you could see here. They're not doing that great. They're not leading the market anymore like they were last year and first part of 2020. And that's a big, big, big red flag. Yeah, you see here? I just showed you Facebook, Amazon, and NVIDIA. NVIDIA was the fastest growing stock this year, and it hasn't been able to outperform the broad market or the Russell last few months. Big companies and Democrats, big tech companies and Democrats don't go well together. Democrats tend to reward small companies and break up bigger companies. So you may see higher odds of a breakup in a company like Amazon or Facebook or NVIDIA. But generally speaking, ever since the first debate, Biden, ever since there was a higher probability that Biden was going to run the White House or win this election, large cap tech stocks have been underperforming. So keep your eye on QQQ, especially if the COVID case rate goes higher. It's more vulnerable than small caps to the economy. So be very, very careful, and don't expect the NASDAQ 100 stocks to be the leaders in 2021. Look at emerging markets, look at global stocks, and look at smaller stocks. Finally, keep your eye on Discover. I think Discover is going to be a really hot stock in 2021. Why? Well, because consumer credit is going to recover a lot faster than commercial credit. And Discover doesn't deal with businesses like American Express does. It only deals with consumer credit. Consumers need credit right now. They're paying their credit off because interest rates are low. And hopefully Discover will continue to see this type of a run. The fact that they are not dealing with businesses and only deal with the retail public or consumers is a big, big plus for Discover in comparison to other cards like American Express, Visa or American or MasterCard, because they do have commercial and business accounts, and those are not doing well right now. Like American Express, huge amount of spending goes into air travel. There's no air travel right now. So I like Discover Card. I've liked this company a lot. I think it's a hot stock. Ticker symbol DFS. Keep an eye on this. And here's an ETF that I believe will do well in 2020. This is the GX China Consumer ETF. It has stocks that benefit from consumer economy, which should be rising right now, and China. China consumers go together right now, like JD.com, Alibaba. China's getting out of this COVID mess faster, and because emerging markets are rising, I'm expecting an uptick in Chinese economy. And China's getting out of this mess faster than US. So just to review, don't write off gold yet. Keep it at a level of 1970 as a buy. Keep your eye on emerging markets. I think they're going to outperform. They're at a 3-year high right now. Ticker symbol VWO and EEM. I'm not a fan of the NASDAQ 100 because FANG stocks have not taken out their September 2nd high, and they have been underperforming the small caps and the emerging markets over the last few months. Stocks like NVIDIA and Facebook. I like Discover a lot as a company because it deals with consumer credit, not commercial credit. And if you like exposure to global markets, which I highly recommend you get used to right now, here's a ETF that trades on the US exchange, CHIQ. It can give you exposure to consumer discretionary stocks in China, which is where the money is moving right now. You've got global markets and you've got consumer discretionary spending. It's a match made in heaven. Also, before I let you go, I want to show you something else. These are the 10 major sectors. Be careful, be careful, be careful with the financial sector. I know it's been rising a lot, but if you look at a 2-year high, it still hasn't taken out that February 2020 high. So I would be cautious. I'm not going long anything that has not taken out the late February high. And here's another problem that I'm seeing. Industrial stocks have not been moving higher. They've been moving sideways. And so have basic materials here. You could see here industrial, and you could see here basic materials. Now, I'm not giving up on them yet. I think they're going to rise, but the fact that they've been moving sideways and not have been moving higher for the last few weeks or a month has been bothersome. So keep an eye on these sectors, and hopefully we'll see a breakout to the upside. If not, that's going to be a big, big red flag for the overall S&P 500. So keep your eye on industrial sector, ticker symbol XLI, and basic materials, XLB, and hopefully we'll see a breakout to the upside instead of a downside. Usually after a long congestion, you see a good directional breakout, but we never know if it's going to be higher or lower. If it's higher, we're good because both of these sectors are trading well above the February highs, and they look to go higher. But again, I'm being cautious right now because they haven't taken out that they've been kind of just moving sideways. Doesn't mean they're going to break down, but I'm getting a lot more cautious with them than I was a month ago. So till we see a breakout on them, I would stick with the small caps, the small caps like Russell 2000, IWM ticker symbol, emerging markets, EEM, VWO, and Chinese discretionary ETFs or even Chinese stocks like JD, for example. They've been doing really, really well lately. So again, that's what I've got for you today. You may want to review this video because I've given you a lot of information here, But there's a lot of things going on right now. I'm seeing a lot of money moving out of US big cap stocks into smaller stocks and into global markets like China and emerging markets, and stocks that are traded in the US exchanges but are Chinese companies that benefit from strong consumer discretionary earnings and profits in China and possibly US. I hope that helps. Folks, we're now less than a month away from Joe Biden being sworn in as the 46th president of the United States. Historically, stocks that do well under a Republican leader tend to underperform when a Democrat takes office, and vice versa. So there's no guarantee that today's stock market will look even remotely the same come January. But, there is still a way to make Trump-sized gains in the new year, even if he's not in the office. And that's something to be excited about. Trading expert James West and I put together a special presentation showing you how to maximize your profits in 2021, no matter what happens if the stock market over the next few months, no matter if it goes up, down, or sideways. Click on the link below to learn how you can join this limited event and prosper in the new years.